Hey traders, this is Ron Haight at Market Tamer. Happy Halloween. Hope you're having a fantastic day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues. Should always be addressed with your financial advisor. The markets were up nicely today, but they came well off their highs. The SPY was up just over 1%. You can see here we made it all the way up almost to the 200-day moving average in purple and the 20-day EMA in red, which are both right around 275. We sort of got near them today and came off the highs. In fact, if we switch over to the ES chart, which is the S&P 500 futures ES, you can see that right around here, around 3:20 p.m. Eastern, the market just fell right off a cliff, and we went from about 2733 all the way down to nearly 2700, 2705, had a 25 plus point decline in just over half an hour. Now here in aftermarket, we're starting to see a bounce. We've gotten about half of those, almost half of those losses in the last half hour back. As I do this video, it's about 10:30 p.m. Eastern, and we're just pulling back just a little bit. But it was interesting that the bulls did not want to take that rally into the close for whatever reason. So here's what the litmus test for me would be tomorrow. I'd want to see the SPY get back above 275 on a closing basis. That would clear both the 200-day and the 20-day. That would be a sign, okay, the bulls are feeling a bit more confident about themselves. Today was a Wednesday. It wasn't like it was a weekend. Maybe it's still a little bit of the election jitters that the bulls are still feeling, but that 275 area is what I want to get above. The diamonds, the DIA. This one came up, did tag the 20-day EMA, but again closed in the lower third of the trading day, was still up 1% right on the nose. Volume pulled back again, and that was also prevalent with the S&P. Volume just wasn't there. I'd want to see above the 20-day EMA here to feel a little better from a bullish perspective. Otherwise, this is just a bounce right now. Now here are the Qs. They finished up 2.35%. They were really rocking at one point today, but they again could not get above the 200-day. Now the 200-day right now is around 171. The 20-day EMA is around 172. So if we can get to about 173, we would clear both the 20-day EMA in red and the 200-day SMA in purple. That would also make this a little bit more bullish. And the IWM only finished up 0.2%. In fact, it finished at the lows of the day. Not very confident on behalf of the bulls. Just, if we would have closed near the highs of the day, you'd say, wow, that was a good close. Not a good close here on the IWM. In fact, we almost finished unchanged on the day. So overall, if we just look at the SPY, which, like I said, I have a bullish position in, we're above the 5-day. Therefore, the outlook for the next 5 trading days would be bullish. But we really need to get above 275 for the bulls to feel a bit more confident about themselves technically. Then really quick, we'll just look at Facebook here. Facebook, if I zoom in, you can see the big gap down from the July earnings report. We came off the highs, did not get above the 20-day EMA on a closing basis. I'd want to see Facebook actually get above the orange line. If it could get above the 50-day SMA, that'd be more bullish. Right now, it's around 161.5, and maybe consider some bullish trade ideas at that point. Right now, this is just a bounce, and it's not very convincing just yet. GM had a huge gap higher, 9%. If it gets above the 200-day, there is a gap fill around 30. What is that? 39, and the target is up there around 43. But that was a good volume move on GM. 3D Systems got clobbered today, down 28%. It also is testing the lows from August. I mean, this is only now a $12 stock, which is amazing. But if it gets below that 12 area, you start coming down here to 9. So there still could be like 20, 30% plus downside potential. And then APC, which is Anadarko, this one has just been falling, zoom in here, falling like a rock. And ever since it broke the 200-day, when the market started to sell off, that was a sign that, even though earnings is maybe a week and a half away, it might not be a bad idea to consider protective puts. And now we are just collapsing. Today, we gapped higher, bearish engulfing, and the target, because we're basically below the lows at 55, it's all the way down there around 46. $6 lower, over 10%. And OELD, or OLED, which is Universal Display, had a nice move today. They are reported to have earnings tomorrow after the bell. If they get above this 130 area, and as long as it's not that much of a big move, there might be some interesting reward to risk ratios for some trade ideas, because the initial would be about 155 for an upside target, then maybe 160, but then all the way back up here. So we're going to keep OLED on the watch list. That's it. Again, happy Halloween, and we'll see you tomorrow.